Okay, so welcome back, guys. Today is the 16th of October, making this video past midnight, but we are going to be looking at what went through for the 15th of October trading. So right here, having a 1 minute time frame of the nasdaq, the mini future, the December contract, and what I have marked here is the daily fair value gap low. So going into, as we all know, last week's Friday, we had a major drop in the market. All crypto crashed, all stocks crashed, and futures also did that. So that Friday's trading, we'll have the market still correcting into that, but Thursday's trading, and Monday's trading form a fair value gap, and I'm referring to that with price. And note that I had, if Friday didn't drop that much, I would have Tuesday as the low of my week for last week's trading. So I'm having Tuesday's low marked out right there as that black dashed line, and then I'm having these dotted lines as my quadrants for the daily fair value gaps. I'm having the daily fair value gap low as that blue line, having the daily fair value gap high, and the upper quadrant consequent encroachment, the lower quadrant, and the low. So going into the pre-market session trading, I'm having 7 a.m. referring into the daily fair value gap low right there. 7 a.m. opens up, if I were to close below that, then the market drops below that and use that as resistance again and again, and then the market drops. The market drops clearly into this low, going into what? This 1 minute BC, buy side imbalance, sell side inefficiency. The market drops into that, but dropping into that, we have lows, we have a high and a lower low. What does that mean? This is a breaker, so I'm measuring from the low to the high to give me my optimal trade entry. Having this candle closing back above these optimal trade entry levels, and I want the next candle to come and tap back into these levels and give me a sort of rejection from them. So the week of the rejection will be used as an order block. That's what I have right here. I'm having the market coming back up and closing above that, then we form a volume imbalance and the market drops back into the sweet spot. So I'm having a week, it rejects back. That week is used as my order block. So this is my first entry, the market coming back into the 0.618, dropping to the 0.705, that's second entry, and then third entry when the market comes back into this week. And then we rally from that. We have a bearish fair value gap, switches into a bullish fair value gap right here. The moment the market gives us a body closure above that, and we are having it with the daily fair value gap low. So the market inverses that, drops lower, going into what? 8 a.m. trading. And what do I expect? I expect the market to go above this high, that pre-session high, and going into, I'm having significant highs right here, attacking this high that is at the lower quadrant. So I have that marked right there. I'm expecting that to be targeted, but not looking at that right now. If I am to zoom in back into where we are at right now, how far do I expect the market to go above this high, the negative 0.25? So if I'm to measure from the start of the move that trades that high, if I'm to measure from this low coming into this high, putting on the extrapolated high and low, I have the negative 0.25. Negative 0.25, I do not look at what the market does after that. So this is the expected range. I expect the market to move, and I'm going to draw quadrants on that. So I'm having from that low to this negative 0.25, drawing quadrants on that. I'm going to make these dotted. I'm going to make those levels dotted. So I want you to keep a keen eye on that. those are our levels. So I'm taking this off, and I'm working with this, looking at the quadrants of that expected move. I'm having from, what the fuck is this? I'm having from that candles. I'm working at that. So the market at opening up at 8 a.m. we drop back into the 0.75, which is 2494.75, and then the market goes back above this, reinversing this. Now this would be an entry coming into half of that expected range, and I expect this 0.5 to be used as to give me a significance in price action. So we have a volume imbalance with it, and the market uses that to rally higher, going into the upper quadrant. Tuesday's low also gets rallied through its speed, and then we hit our target. So the rest of this is collateral. Now the market drops into Tuesday's low, using it as support, and the market is held within that range. So we have a consolidation after 8 a.m. hits its specified goal. And what do I say with that? I say time distortion. That is called time distortion. So the market plays games with your mind to shake you off your bias. So 9:30 opens up. I have where I expect the breaker to form. Where do I expect the breaker to form? From this candle's high to this candle's low. This. From that high to that low. So if I'm to draw and get my optimal trade entry, I'll have that to that. Circling on the optimal trade entry. I want to see this being used throughout price action. Okay, so we have the market accumulating into this. This is the highest high. You see, it's above this high, so that's why I'm using it. If this high was lower than this, I would use this as my highest high going into this. So I'm looking into these levels, but I'm also having Tuesday's trading, which has held the market for the whole of this time distortion right here. So the moment Tuesday's low is closed below, I'm looking for sales below that, and the sales I'm looking for are to take me into this low that formed during the pre-session. Note that I'm not looking at anything before the 7 a.m. 7 a.m. opens up, gives me my draw on liquidity, and I'm watching that. So we have this fib level of trade entry. 9:30 before 9:30, 9:27 opens up, rallies into those, and then 9:30 opens up. So if I'm to quit this and measure from this high to that candle's low going into 9:30, market gives you that. Now what happens if I reduce that coming into that? It always gives me an entry this high to that low. Oh, sorry. I thought my charger was plugged in. Have to be plugged in right here. Have to be plugged in. Yeah, I am. Okay. So the market trades into those. Taking that off, that would be an entry. So the market drops lower, forming a fair value gap within this, but I don't consider it as my first presentation. If I would put that off, I wanted to be using it as an inversion. The market referred to that a lot. My first presentation fair value gap is this, just because this 9:30 candle incorporates itself with the candles that form a fair value gap. So I do not consider this. If it was 9:31, 9:32, and 9:33, I would consider that. But I'm having the 9:30 candle in the pattern that forms the fair value gap, so I'm not considering that. I'm considering this as my first presentation fair value gap right there. from that candle's low having no volume imbalances to that candle's high. So this is my first presentation fair value gap right there. Now the market drops coming into this low. How far below this low can the market manipulate to? If I'm to measure from where the move started, from that to that low, or measuring from the high to the low, still it gives me just like that. So the market drops and takes out this low, not considering this fair value gap. Let me put it off. How far below this low can the market manipulate to the negative 0.25? The market hits that. After hitting this, the market rallies. We start to rally. I'm having a low, a high, and a lower low. So what do I expect from you? Every low that takes out this low, so it's at first like that to the high. This is how I do my optimal trade entry and mark the optimal trade entry, waiting for every move that takes out this low. The market, not that I'm not using this low and every low that goes below it, just because we did not hit our negative 0.25 target. Now I'm using this low because I'm expecting a low to take out this, because I still have a target that is not filled. So if this low had taken out this target, I would be using that low to that high and waiting for a candle to close back above. So we hit this target and I'm using the current low that is formed right there, just like that. Just like that. Now the market rallies back above at this candle, then this candle rallies and closes above the 0.618, and now I'm looking for my execution. The moment the market comes back into that, I'm executing, I'm taking longs. So this candle drops into the 0.618, that is my entry. Then we rally higher, closing above the first presentation fair value gap. The market refers into that, the low of this first presentation fair value gap, and then we rally into the inversion fair value gap that formed at 9:30. We have Tuesday's trading. The market trades into that, fails, rejects into that one more time, building strength, and then we push into that, closing above this fair value gap, which is used as inversion. Then we rally higher and higher, going into this high. How far above that high can the market go? If I am to measure, how far above that high can the market go? Extrapolated high and low, targeting 0.25. 0.25 is close to consecutive encroachment, so I'm looking at that. If I am to put expansions on that and target standard deviations of this move that gave me the breaker, targeting 2 standard deviations. Not that if I don't know whether it is fine if I can take this entry off, measuring from this move that gives me the change in set of delivery. So I have a change in set of delivery right there to the low. I'm having the -1 standard deviation aligning with the half of that. Now what did I tell you? Between the -1 and the -1.5, now this is one of those scenarios where the market ends at that is the most it can give you, and I see himself attend to this, because he himself said that precision once killed him in the market. Like, if you want to be so precise, you should give the market room for error. Now the cents and pennies you would have made on that entry that rallies higher are not worth it for you to lose all this money you made back in this move dropping lower. It is not worth it. So I'm having -1, half of this range between the -1 and the -1.5. That is the most expected. So if I'm to draw quadrants on that, just like that. So I'm looking at half of that. Market gives that to me with speed. After that, we start accumulating. And can you tell me that you can manage this after having the whole of this straight move up? Can you manage this drop lower, or you expect? Remember, if I'm to show you how this move forms, we have a fair value gap, we have the market rolling down. So can you manage this stress here that the market will not drop back into this? Now thinking into that, I'm fine with half of this range. If I have taken the move from this, even if I took it from here, this is fine, this is okay. Going into half of the range between the negative 1.5 and negative 1, that is really fine. Targeting consequent encroachment of that daily fair value gap or the upper quadrant, we fail to reach that, a sign of bearishness. So this 0.5 holds the market, the consequent encroachment of that daily fair value gap holds the market right here. So I expect when the market closes below that to give me a significancy or a change in set of delivery. So if it has held the market just like that, I expect it to act as some sort of inversion in some way. So the market drops going into 1130. If I'm to mark for you where the lunch macro starts from, going into 1130, the market drops, closes below 0.5, gives you a fair value gap, have a volume imbalance right there. That's why I'm marking it like that. Then the market gives you a fair value gap going into the lunch macro. And note that if I'm to put this off, everything off, I'm remaining with my first presentation right there. But I need that on the chart. I'm going to put this off. I need something. Let me put even the first presentation off. So I'm going to leave my first presentation fair value gap. Okay. I need everything off. Sorry, I think I'll need a screenshot of this. I think I'll need a screenshot of this, just like that. So Ctrl Z. Okay, so if I'm to take everything off here, leaving only the daily fair value gap low, and I want to talk about, so I'm leaving that there, how the lunch macro traded with the opening range at. So I'm looking at opening ranges right here. I have the 12 AM to 12:30 opening range for today, and I want to mark for you the 12. So I want to mark the 9:30 to the 10 AM opening range. So I'm having from this candle's low to the highest high in this range, which is that. Extend that into price, and this is what I'm working with. If I'm to just make this light blue, middle line, I do not need the middle line, I think. Making the border light blue too. Okay, I want you to look at the Tuesday's low. Oh, I have this level on. I don't have that level on. The daily fair value gap low. This is fucked up. If I can go to the daily real quick, if I can refer to the daily real quick here, I need the low of that fair value gap right there. Okay, let's go back to the 1 minute. I need to show you something that I hadn't talked about in a while. We have the 12 AM to 12:30 opening range, which hasn't been satisfied. So I'm still looking at this as a strong draw on liquidity. So the market manipulates for sells here, and then we look for buys. So I'm expecting the market to come back to take out this low. And how far below this low? I'm having the 12 AM to 12:30 opening range as a draw on liquidity. And I'm having these lows right here. Now going into those lows, which gives me Thursday's New York trading. So these lows right there, I'm looking at the 9:30 to 10 AM opening range right there. If I am to draw quadrants on that, beautiful. So the market drops into this. I expect every level of this opening range from 9:30 to 10 AM to give me a significance in price action. So the market drops into the top of that range, close below that, and it aligns with the upper quadrant of the lower quadrant of the fair value gap on the daily. So the market gives you a candle within that. We will test into that range. Now if I'm to look further and draw a middle line to separate the top of that range and that lower quadrant of the fair value gap, so nothing is random. I want you to look at this candles wick. We have, so that is the top of the range. We have the market trading into the lower quadrant of this. So the market trades back into that, fails to reach consequent encroachment of this. We have this upper, the top of the 9:30 to 10 AM opening range, and then we have the lower quadrant of the daily fair value gap. So between that, having my fib levels right there, the market trades into the lower quadrant and fails to reach half of that, and then drops lower. Not how it's traded like that. Then market just pulls lower, coming into the upper quadrant of this opening range. We drop, fail to reach that, and then we drop below, closing below it. So I expect the market to give me significant price action. If it happens to come back into the 0.75, I expect it to hold. So by dropping into that, we form a fair value gap right there. So if I'm to mark this out, this is my bearish fair value gap. As you can see, the bodies tell the story and the wicks do the damage right there. Wicks give us a mohawk coming back into this week. So how far above this fair value gap can the market manipulate to? We have this balanced price trend. This candle drops lower, comes back into that. This opens up, trades up, and then lower. So this range has been worked with. I expect the market, if it is to manipulate through this fair value gap, I expect it to go to this far. I don't expect it to continue higher. That leaves me with a breakaway gap. Now that's how breakaway gaps come with. If I'm having this balanced price range here, I don't expect the market to come back into this fair value gap right there. And this, I expect this to stay open, the market to spoil with speed. So this is, remember, this is the open. This, we are trading into the lunch macro. So lunch macro opens up here, we drop lower. The run starts at the lunch macro, we run lower, closing below that, and this candle happens to close below Tuesday's low. So the market rallies into that fair value gap, closing back below it again. So this can be considered as a correction. The market drops into consequent encroachment of this 9:30 to 10 AM opening range, close below that, market trades into that one more time, dropping lower below that. I want you to look at how significant these levels are. Now if I'm to expect the market to continue lower to give me this, I expect it to trade back higher into premium of this range, which is above the 0.5. The market does that, going into Tuesday's low, refers into that fair value gap right there. This was inversed. We have an inversion fair value gap. So this is the ICT Veno 125 mentorship. We have this and that. So looking at that, bodies manipulate here, then we drop lower. Okay, coming into Tuesday's trading, we drop lower. We have a fair value gap at half of the range. The market respects that cleanly, and then we drop. Going into 12 a.m. to 12:30 opening range, the market just drops back into that. After that, market satisfies a move. Remember what I told you. If we are to expect a bullish week, I expect, since the market took out Sunday's open and stayed and went back above that, I do not expect the market to come back below Sunday's open. So this is left open. We have this level. Market does not trade into that. I expect it to rally from that, going higher. Okay, and that is what the market does going into 130. Open at 130 right there. This is the 130 open, just like that. Okay, it gives you an entry, and we rally higher, coming back into this range. So we are trading at approximately the daily fair value gap low, and that's where the market has closed. I'm waiting to see where the market gives me the new day opening gap. We tapped that daily fair value gap low, and the market consolidated. Okay, thank you for listening. I think we shall continue from there tomorrow. Shall look at what happened in the market tomorrow, and I'm hoping to start live executions in probably November. I'll work on that. I want us to use all these concepts and all this knowledge into a trading pop farm, and we see how far can it take us. So I'll be doing that live or sharing executions, sort of that. So thank you for listening. Subscribe and like. Don't forget to share my videos for further clarity in the ICT concepts and to make them easy. Thank you.